BlackRock's Larry Fink believes the next step after spot Bitcoin ETFs is the tokenization of all financial assets, with every stock and every bond having near instantaneous settlement on a distributed ledger. Now, to discuss this prospect, we are joined by Zodia Markets Ireland Executive Chair, Michael Walsh. Michael, welcome to Yahoo Finance Future Focus.
Thank you, Brian. Good to be here.
Thanks, Michael. Now, BlackRock CEO Larry Fink described spot Bitcoin ETFs as stepping stones towards tokenization. Are we seeing a move towards the tokenization of all real-world assets en masse? And will it give BlackRock, or are they seeking first-mover advantage?
Okay. Firstly, unambiguously, yes, we are moving towards tokenization of real-world assets. There are a lot of reasons for it that we're going to go into in a little while, but mostly it's speed and efficiency of distribution, and fungibility and fractionalization. So the answer is yes, we will do that, and we'll deal with exactly what those are later. BlackRock is the largest asset manager in the world. It has $10.2 trillion under management. It has one job, which is to look after your money and my money, but to earn fees on that. So the larger your assets under management, the larger the fees that you will earn. Because of the demand for real-world assets, tokenized real-world assets, it means that BlackRock has first-mover advantage. They've already got $16 billion in their Bitcoin ETF, and of course, as you and I have discussed earlier on, they also have a US Treasury Fund, a dollar-denominated Treasury Fund, which has been tokenized. They're not the first people to do it, but they've had immediate inflows of almost $1 billion. Huge demand, and it gives them a market-leading position, or helps them maintain their market-leading position as the world's largest asset manager.
Okay, so we know there are good reasons then for BlackRock to gain first mover advantage when it comes to tokenization of real world assets. But how is this going to look for the normal man or woman on the street or low level market participant?
Sure. Okay, so let's talk about a Bitcoin ETF first, and then let's talk a little bit about the US Treasury Fund that they've also tokenized in BlackRock. Let's talk about those, for example. First of all, at the moment, if you as an individual on the street you want to buy Bitcoin, you've got to set up an account somewhere else, but you may not trust the exchange or brokerage that you're dealing with. If you're already a BlackRock investor, then you're literally moving your money around within the same structure. That's the first thing. What it means on the tokenization of a real-world asset for the man or woman on the street is because you can go right back to basics. It could be any asset. It could be your house deeds. So, for example, your house deeds are probably written on paper, probably about half a foot thick. Some of it probably written on foolscap, but written in copper plate writing. At the moment, when you need to sell or buy that house, you have to get a conveyancing solicitor on both sides to agree every part, every layer of that, whatever it might be. Imagine a world where your house was tokenized, and to match up the fields in order to sell or buy that property, all you had to do was to press a button to make sure the fields matched. Imagine what it would do for you and for the buyer or seller, and imagine what it would do for like senior clerical roles like conveyancing solicitors.
Okay, but there are all other aspects of this, like fungibility and liquidity and increased fractionalization.
Oh, absolutely, absolutely. So at the moment, many countries won't allow you as an individual to own a fractionalized share. So if you have a share that's worth $1,000, but you only want to invest $100, you can't do that in many countries. Instead, if it's tokenized, you can sell any fraction, sell or buy any fraction of that share. That's a small example. On the other hand, or alongside that, you may also have a fractionalized part of a US Treasury or a UK gilt, whatever it might be. If they're tokenized, you can exchange those more or less instantly without going through the whole process of registering and deregistering your interest in those companies or in that government. We could end up in a situation, theoretically, where if you have tokenized money, so tokenized sterling or tokenized dollars, and you have a tokenized, say, a Google share or a UK gilt, you could end up in a situation where you pay for a cup of coffee using a fraction of a Google share or a UK gilt, because it is not the actual gilt or the actual share. It's just a tokenized version of it, which is instantly fungible on the same blockchain.
Okay, that is very interesting. I can see how this can become attractive. Now, will this increase the accessibility to a broader range of financial assets for, say, low-level market participants or people that currently can't access these products?
Yeah, I mean, a very good example of that is something like a private equity fund or a litigation finance pool, for example. These are not publicly listed markets, but instead what you have is, let's say, a pool of money comes together into a private equity pool in order to acquire any business, and to run that business for the benefit of the pool of money, the private equity pool. Normally, to get invested into a private equity pool or a litigation finance pool, you'll have to be an extremely wealthy individual or institution. If, on the other hand, you were to tokenize that private equity pool or litigation finance pool, then it could theoretically be sold in increments of maybe $100 or something like that, which means that you and I can just go online. We don't have to walk in anywhere. We just go online and we buy $100 or $200 or $1,000 worth of a private equity pool, which would not have been available to us in the past. It's proper democratization of finance.
I did hear that BlackRock have already used the Ethereum network for some, you discussed that for some of these tokenization efforts. So what role do you think the Ethereum network is going to play in all of this when we look at BlackRock partnered with Securities to launch the tokenized asset fund on the Ethereum network a couple of months ago? Where do you see that being the layer one or the go-to blockchain for this whole big advancement?
Yes, is the answer. The short answer. I mean, markets being markets, there will be competition and there'll be developments, and Ethereum may not become the dominant one. For the moment, it certainly is. It's well known, it's reliable, it's been used for smart contracts across multiple aspects of financial markets, and most importantly, it is a public blockchain. The difference between a public and private one is that a public one, if you and I are participants, then we are in control of our own assets and in control of our own keys in effect. So only you and I can affect the transfer of the asset on that blockchain. On the other hand, if you have a private blockchain, such as some of the bulge bracket US banks have developed, it means that they control it and they control the valuation of the assets and they control the movement on that chain. So I think the public blockchain, and most particularly Ethereum for the time being, are probably going to be dominant. There's also another one called Provenance, where you already have a lot of private lending through Figure, for example, which is over $7 billion already on Provenance. This
is also going to benefit, say, people in countries in the world that could possibly be like less rigorous laws when it comes to the kind of exchange of securities and all sorts of things.
Sure. So you're worried about those securities being used for nefarious purposes?
Yes, that, or even some kind of exploit of or changing of a ledger if it's owned just by one entity.
Sure. Well, actually, the funny thing is, the least compliant instrument out there is cash. Okay. Because cash isn't traceable. Cash comes in your wallet or sometimes in suitcases. On the other hand, if it's on a blockchain, there's a record of every single transaction, and the provenance can be proven. So yes, it's possible. Mm-hmm. It's less possible than it is using cash, and less possible than it is using, let's say, fiat currency that has already been layered and placed into society, so that it's already at a reputable bank, for example. Okay. So in fact, if anything, I would say that it is a safer form of transaction in every way.
And also, the things that I own, do you think when more and more people start using distributed ledgers to store their assets that they own, do you think there'd be more of a rush to get these digitized, to get these tokenized on distributed ledgers?
Yeah, absolutely. I mean, and so there should be, because there's faster, cheaper distribution and a greater fungibility.
Well, Michael Walsh, thank you very much for coming on this week's episode of Yahoo Finance Future Focus.
It's a pleasure, Brian. Thanks for having me.